Patrons, subscribers, fans, followers from around the world, welcome to your newest edition and episode of the IR4 podcasts. It's me, Jeremy Alexander Newsome, with our guest today, Michael Thomsett, and of course, Mr. Brian Masterson. Today we're talking about cashless future. We're talking about binary options on sports betting. We're talking about cryptocurrencies. What does all that look like? Let's rock out. So, Michael, you're the one that kind of threw this idea out at us, which I thought was really interesting. Tell us, at least I guess maybe your perception on the sports betting. That's new.
It's new. It's every state.
Yeah.
Well, the way I see it is that it's going to open up a whole realm of possibilities. We have binary options over here. We have sports bettings over there. And if the two get together, you probably see all kinds of good stuff happening as far as people that used to be investors and then they became traders and now they want to be speculators.
Yeah.
You're doing options. You're probably gambling anyway in some regard. So why not throw crypto in there too? And making it even more interesting, what about options on cryptocurrencies used for gambling?
Yes. You're
getting leverage on leverage.
Well, that was a question I wanted to ask you too last time. That's another reason we're having you back. I'm sure if some of you know this is his second time here. We enjoyed you that much. We want to have you back. What do you think about the cryptocurrencies, Bitcoin, Ethereum, Litecoin? When will they have options, or will they ever? I mean, right now Bitcoin has futures. Will they ever have?
It's kind of the same thing.
Very similar, exactly.
I think that CBOE is looking at this and are considering doing calls and puts on crypto, but I'm not sure right now if it's too volatile and whether the clearing operations want to be exposed to the volatility of crypto until it settles down, or there's some sort of collateral offsets to some of those short positions. They might not be willing to do it. So I think it's a matter of it becoming more mainstream.
Yeah. How long do you think that'll take? Probably.
Who knows? It could be a matter of weeks or several years. With things like this, with markets, especially when technology is involved, it's very difficult to know how long things are going to take to flesh out.
Now, I got to share one of his coolest ideas he's ever had. This is how he just blew my mind. Was about the equity markets going on the blockchain. So instead of right now, more or less, you're having, it's pretty much internet-based. All the transactions, everything is realistically internet-based. Yeah. So what about a pure cashless, blockchain-based system on the equity market? Everything moving to a whole different digitalized, distributed ledger.
It's a cool idea. The thing that I'd be concerned about from the point of view, if I were a CFO of a Fortune 500 company and this idea is proposed to me, the first thing I'd say, of course, is what happens if that crashes? What happens to our capitalization? What happens to our shareholder equity? I mean, is it safe? And it's sort of like the old marathon man question: is it safe?
Yeah.
You don't know whether the cryptocurrency is going to be stable enough to support the market, which is kind of ironic when you think about. You always hear, are there markets safe enough and volatile enough to support cash? This is the opposite question. Are cryptos safe enough to support the market?
Yeah.
That is a good, different perspective there.
That is.
I mean, if you think about it, put yourself in the shoes of the CEO for a second, and someone said, hey, we're going to go away from cash and at least a portion of our equity be issued in cryptocurrencies instead of cash, or we're going to issue shares in exchange for cryptocurrency, which is the more dangerous part of it, because the CFO's answer is going to be, would that be a prudent thing for me to do, given that this whole thing could crash, which is what everybody is saying these days. And so if I give out shares and I take the crypto and it crashes, that means that you've got my shares and I've got something that's worthless.
Right.
The same thing could happen to cash, by the way.
Yeah, right. The same thing could happen to cash. Absolutely. You look at you have to look at all aspects of that industry, right? So the exchanges, they're becoming a little bit more diverse and a little bit more structured, but regulation is still out there.
Yes.
So when regulators come in and put a more definitive landscape together as to what's black and white, I think we're going to see some better players start to emerge. We're going to see those resources where the exchanges will allow for that to happen.
Sure.
Because then you'll create the stability that you would need to support what we're talking about here. But that's just, I don't think it's not there yet. It's underdeveloped.
Yeah, it's the same thing that happened imagine what happened in the 16th century with tulip mania in Holland. I mean, the whole market crashed because it was all based on people not only putting their whole fortune into single tulip bulbs, but borrowing money to do it and mortgaging everything. And once that all happened and it crashed, they had a sort of come to reality moment where they had to sort of reconsider what is our market and how do we keep it stable and safe. And over the next 50 to 100 years, they had to reinvent themselves. And that's what would happen in any market that crashes. It's going to have to reestablish its reason for being.
Sure. And, I think there's two separate markets here, right? There's this digitalized blockchain type market and then our old system, our current system. But there needs to be a bridge in order for the volume to flow either back and forth or from one to another. But I definitely see us moving into this digitalized realm where everything's going to be represented on a blockchain. It's more secure. It's more transparent. There's still so much fraudulent activity in our current system.
Absolutely.
And
it's the same sort of problem as how can a company that has a negative net worth, like Sears, for example, they have, I think it's 300% debt, which means negative 300% equity, total capitalization, and yet they're still selling shares, and people are still buying their shares. Right. I don't get why you'd want to buy a share of Sears right now, leave alone go into one of their stores, because it's a heart-wrenching experience.
When you guys explain that to me? Because that's a good question. Why the hell would someone buy Sears if it's 300% in the red?
Well, that's another example of going back to the question of what's the CFO going to say when someone proposes sell me some shares and I'll give you some Bitcoin. The CFO's question is, how do I know that this Bitcoin is going to hold its value? Well, my question would be, okay, Mr. Sears CFO, how do I know that you're going to ever get any equity back in your stock? I mean, we're both on either side of this question about, is there any real value in this product that we're talking about exchanging?
So let's take cryptocurrencies out of the picture. Okay. And you go to your normal brokerage, and instead of when you buy some equities, what are you receiving? Certificates, essentially.
Not even that anymore, really.
No, you used to be able to, or
it's all electronic.
You still can.
But you can if you insist on it, but it's all street name now.
Yeah, it's numbers on a screen, man.
Yeah,
it's
just like nothing. Crypto stock is what it is.
Nothing physical.
So why not put those digital numbers, where it's I bought 100 shares of whatever, and put that on the blockchain, so you're not really purchasing it with cryptocurrencies or anything, and it's not a cryptocurrency. What you're doing is you're purchasing it with U.S. fiat dollars, but you're getting a digital asset that's a security.
Which is what you have now, by the way. It's just shares of stock. It's all digital.
Correct, and but that can be manipulated, and we can't look at the manipulation going on in that digital world because it's all behind closed doors.
Let me throw another idea out at you, a counter to that. What if a company, Sears or GM or Walmart or Amazon, what if they wanted to experiment with crypto payment for shares? So instead of interfering with the current system, which is cash for digital shares, you say, I'm going to issue a new class of stock. It's a common stock class B, and it's all going to be crypto. And we're going to see if there's enough there to raise money with it, and it'll be extra capital for us. And if the value of the Class A common goes up, the Class B will go up too. If it crashes, the crypto people lose, we lose, and boom, there it is. Same thing with the Class A shares. If our share value goes to zero, you lose all your money, we lose all our stock. So it's the same thing.
I think it'd be interesting to do kind of a beta test or a test net of just taking the Fortune. Let's do top 100, and we mimic how many shares are out there in current circulation. But then and this is all hypothetical, but then you put them onto the blockchain. Each has their own blockchain. So Walmart has its blockchain.
So each company has its own.
Each company has, and I am not a fan of calling it a coin or a token if it's going to be representing a security. So just call it the Walmart DA for digital asset, and that's the representation of the security.
How about put all 100 together and do an ETF? The top 100 blockchain-funded ETF. The basket of securities is the top 100. The share value is this, and is all paid for with Bitcoin. Now, in that case, if you believe in Bitcoin and you want to invest in that ETF, then you can do it, but you're not taking the same risk as a stockholder would buying shares of Amazon or Walmart
or the individual company.
Mm-hmm.
Yeah, it's kind of spread out. I mean, do you think realistically? I've mentioned it. I'd like to hear your time frame. What would be a time frame for not even the, let's just say the U.S. to keep it simple. U.S. entirely cashless. It's like a foreign thing. Like, how long do you think that we're on that?
I think the immediate answer to it is, how can the U.S. become cashless if other countries don't?
Well, I mean, mostly just for your personnel, people who are just shopping, your individual consumers.
Sort of like we are now with credit cards.
Exactly. So it's maybe not necessarily on a trade by trade basis.
It's just be transactional.
Yeah, the vast majority, exactly, transactional.
Yeah, how many people use cash anymore? We all use credit cards, debit cards, online bill pay. I mean, there's no cash really being exchanged. Yeah, I can remember, show you how old I am, when people used to pay their bills by putting cash in envelopes and mailing it to somebody.
No way.
Yeah.
Oh, yeah.
What?
I mean,
because people didn't trust banks because they'd come up with the Depression. I didn't, but my parents did.
Whoa.
And so they didn't have a checking account because they didn't trust banks.
Yeah.
And so you owed $6 for your utilities. In those days, you could get heat and light for $6. So you'd put a 5 and a 1 in an envelope and fold paper over it so nobody could see it, address it to a utility company, and mail it off.
Wow.
I remember my mom going through when I was really little. She would write checks for each bill.
Yeah.
I mean, it's
the people that are still doing that.
Yeah.
My neighbors don't trust the bill pay system. So I said, well, how much are you spending a month on postage? Oh, about $30. I said, how'd you like to spend $0? I said, I haven't bought postage, and every so often I got to mail something, but I'm thinking, gee, where do I get a stamp?
Yeah.
I'm going to call her out really quick. My girlfriend was scared of bill pay for a while. But it's just like the internet is a scary world, you know. But it's.
But imagine that as an extension of people used to be afraid of banks, so they'd mail cash. Now people are afraid of bill pay, so they're still sending checks.
Yeah.
And paying postage.
Yeah.
It's kind of the same thing.
Yeah. Any place that does not have online bill pay, if they don't have it, like a bank, I mean, they're going to be out of business.
Yeah.
Some credit unions are pretty far behind that still.
Are they?
What about checks? I mean, do you think checks or cash would be gone first?
I think checks should be gone
first.
I think
that's
because it's just so easy to be online, and of course you get your paycheck, it's automatically deposited in your account. You go on bill pay, you pay, you never even see cash, and you really don't need checks. If you want cash, like if you're going to go to Vegas or go on vacation or something, you can get the cash, but you don't need checks. In fact, checks become inconvenient in many places because if it's an out-of-town check, you're going to have a hassle getting it.
Yeah, so
you're better off with credit cards.
I think you're absolutely right. That thing I forgot. I think checks actually go before cash, and then cash is going to be following because you can go anywhere and give a cash. But if you don't have a card,
I will say the remittance industry is huge, and that they're going to be using more cashier checks or wire transfers. Yeah. Like that will be more existent than checks or cash.
Well, check fraud is so widespread too. I mean, I can go into a bank with a cashier's check that looks completely legitimate and thinking it is legitimate, only to find out that it was printed up in some guy's garage, or some guy's mom's garage.
Yeah. That's insane.
Man, well, that's what Bitcoin's going to solve, man. All the remittance issues. I tell people all the time, Western Union is worth $4 billion. That's its market cap. Western Union. Yeah. I mean, that has to be gone in 5 years. 10 years at the max.
I would think so, because that's all they really do is cash transfer.
That's all they're doing is just transferring back and forth. They pay people for it, right? Yeah, they charge like $15, 15% of whatever they're selling.
I've been very disappointed with the lack of growth with blockchain solutions.
Yeah.
Everything to this point has been speculative retail investment. I want to make a quick buck. I want to, all that. I want to see the actual products and solutions that this technology can provide to the world, because it's not happening right now. But I see there is a blockade of that happening from large institutions such as banks, such as Western Union. They did not want these solutions to happen because they weren't ready to adapt yet. But you're starting to see these bigger banks and financial institutions starting to adapt the technology, and I think soon we'll start to see more of these blockchain solutions.
But there's a growth curve that we can predict and we can see where it's happened in other places. Give me an example. Option industry started in 1973, not that long ago. First of all, it was only available on calls only on 16 stocks. That's where it started. This is way before internet.
So it was just calls? But why would they have calls if it was...
Well, that was the first thing they did was 16 stocks only calls only. And
But why calls though? Because that's an insurance for a short seller. So I mean, who's short selling back then?
well, but short sellers were just selling stock.
Yeah.
The point is, it was a very young industry, and I would say the first 20 years of the option industry was all speculators. And the mainstream attitude toward the option industry was that this is not for a serious investor. It's too risky. It's too complicated. We don't really know what they're doing in there. So speculation ran it. And if you go back and look at some academic journals back in the 70s and 80s, what they say about options is that they're a bunch of speculators, they're gamblers, they're reckless, they're ruining the market. Well, really, they're facilitating the market.
Yeah.
But the attitude back then was options are bad, bad, bad. And more as we go through time, options have become hedging vehicles and ways you can use them to freeze prices and mitigate risk and do all these other things. Options have become very mainstream. The same thing will happen with crypto. Once the speculation level of it and once the speculation emphasis of it starts to die out, you'll see more practical solutions come in, like, we can use this as a currency. International currency, and do things that we can't really do with cash, because what do? You're going to mail cash or transfer cash without someone looking over your shoulder. But with crypto, since it's all online, you can have it in your cell phone, and you know your codes and your passwords, so you can go over to Latvia and buy a bride, and whatever, whatever you do.
Whatever you do in Latvia.
But you don't want to go where there were 10,000 cash.
Yeah. Well, I think if you were to look at the formula that can show the adoption curve for options, obviously it's not going to be the same formula that used over here. As there's different factors.
Maybe even the same timing.
Well, I would think that with crypto, one huge component we have in that formula is the access to information. So it's a lot more prevalent now than it was back then. So I think there's going to be a quicker adoption than there would be with the options.
But things could set that back, and I'm not against that. I think the quicker the better. But things that would set it back would be, for example, a major invasion and theft of code and these sort of things. That it's the same thing that happens with counterfeit on money and with stealing credit card information and all kinds of identity theft. That if that does happen in crypto, that would be a setback that would have to be worked through to be able to get it more confidence in the market.
I mean, we discussed a month ago, well, less than a month ago, about the future of video gaming technology and like the bingo. How they're so that whole sports betting thing. I think that's going to be a solution that might not be solving world problems, but it will step into certain blockchain technologies coming up with the ability for state-involved gambling,
it's a natural mix on liquidity alone. I mean, you think about, you go to a casino and you want to be a high roller, and you're going to walk in with 50,000 cash.
That's what I'm saying. Exactly.
I mean, with crypto, all you got to do is cash in whatever coins, the whatever electronic funds you need. And you don't have to worry about being rolled outside because you walk out with 50,000 cash.
Right.
That's so true. That is so true. I mean, because it's just really, it will make it safer. And 50,000 might not even be that much for some high rollers.
Right.
It might be millions.
Millions, that's right.
Yeah.
So the legislation that was passed, just so it's clear for everyone, is sports gambling is allowed to happen within state.
The states can make the laws.
States make the laws under the state regulatory framework. And what else will allow for the expansion of that to happen is we're trying to discuss how blockchain and crypto will play into that. But first, I think it needs to be established.
Well, first of all, what's the limits? I mean, is this just professional and college sports of certain kinds, or is it chicken fighting? I mean, what are the limits?
Where are the sports? Where does it get the line drawn? I mean, because there was those big, huge discussions with FanDuel and DraftKings. Is that betting? Because that was a lot of different states were not allowing it. Yeah. The biggest question will simply become which states adopt it and how quickly and
with what limits.
And with what limits. Exactly.
I think because of those fantasy apps and these quick things where you can bet $2, and I mean that's insane to regulate. And I think from a national level, they're just like, hey, you guys do what you think is best, and you guys regulate.
States, you take care
of it.
So
it will be interesting. Riverboat gambling, which is all up and down the Mississippi. You've got all these Harris casinos everywhere. And
but it's not owned. It's the water.
It's the water. And I mean, it's kind of stupid, really, because when you think about it, the only distinction is that you're on a river, but you walk in from a parking lot on land and walk across the bridge, and you're in a boat.
Yeah.
But it's really a casino.
Yeah.
Is a weird distinction. But introducing crypto to this, I suspect that it will make it easier to have sports books everywhere. I mean, in your 7-Eleven and in your gas station. I mean, why not?
Yeah.
Maybe even machines where you could do sports betting on a machine while you're gassing up.
Yeah. Yeah.
Why not?
Why not?
I think it's definitely gonna revolutionize some stuff. I'm excited about it, but where are they gonna draw the lines at? You know,
Where are they going to draw the lines?
Because-
and ultimately, if you can bet on, say, a professional ball game, you always bet against the Titans, by the way. If you're going to bet on a ball game,
And the Browns.
why can't you also play a couple of hands of 21? I mean,
Yep.
what's the difference?
Yeah.
And I can see a state saying, well, if we legalize sports betting, we're gonna go to court and maybe all the way to the Supreme Court and say that it's prejudicial to say you can bet on a sports game, but you can't gamble on a card game. What's the difference?
It has to. Well, no, you're totally right. It has to, because if you take this same exact discussion in any other country, it's almost a moot point, because you have 80% of the world's like, yeah, this is fine.
There's casinos all over London.
That's what I'm saying. They're like, this is fine with us.
And Paris
you know?
and everywhere else.
Oh, most
You know,
of Europe.
and it also, I guess, would come down to what's the definition of a sport. You know,
Oh.
can I get?
Oh.
Well, gaming and sports are very different.
That's
Okay, so roulette and craps and
That can be a
blackjack
sport. That's a sport for us.
You could define those as sports. This is very interesting because you could say, well, sports betting is legal, but that includes cards and dice.
Yeah. Well, they already have that. That's the thing. They already have the distinction on the certain classes that we were talking about earlier.
And
like-
casinos don't call it gambling; they call it gaming. Well, gaming implies it's a sport.
Yeah.
Yes, it does.
It's going to go to the Supreme Court. They're going to have to figure it out. Roll of the dice.
You know, so I mean, I don't know if, but betting on a high school basketball game, like, where are you going to draw the lines at? But the amateur aspect of this as well. You know, I can just see people, you know, starting up some type of
Junior varsity girls wrestling.
I mean,
Why not?
Why not? If you're in Memphis, Tennessee, and the high school basketball scene down there has a huge following, why not create a book? And technically, I mean, so.
And look at another aspect of that. Let's say Tennessee says no to that, but Arkansas says yes. You go over to Jonesboro and do your bets on that game in Memphis, and it's legal there but not here.
Right.
I mean, it's chaotic when you consider that you just go across a border.
So when will this all be smoothed out? When do you guys think? Time frame?
Oh, man.
It's going to be a lot of court cases.
Yeah.
Yeah.
It's going to probably be years.
10 years, like a decade,
Yeah.
for it to really get glossed over.
So-
They've been battling this forever. I mean, the whole, you can gamble but on a reservation, and some reservations are different. If it's Indian land, what type of Indian land, some want it,
And
some
then
don't.
rivers.
Yeah, and then, I mean, they've always been kind of dodging in and out of this.
So, in between now and then, and during, I guess, the course of all that, how can one, you know, create some type of business around this? Just by getting on and making some software and allowing people to go on and sign up?
Well, you know, you already have this a lot of free online poker sites where you can actually win a spot at the World Poker Tour.
Right.
You know, you could win real money, allegedly. I don't know how true that is, but there are a lot of sites that are already doing this and letting people that want to play 7-card or Texas Hold'em, whatever, they can get on there and do that. And it's just one more step to saying, let's make this formal and have real money and real gambling for anybody who wants. But then that raises another question. Since everything's online, let's say Tennessee says it's legal to play poker and blackjack online. How do I know, as the guy with that site, that you're really in Tennessee? And does that matter? What if you're in Illinois where it's illegal? Well, if I let you in, am I breaking Illinois law? Am I breaking federal law? I mean, so many questions come up about this that, you know, we're a borderless country already in so many respects.
Yeah.
So why was the reason this legislation passed, and why did
That's a good question. I don't know why they said
It really was very quick, I feel like.
It was very quick,
Yeah,
but I
it
think
came
it
out
wasn't
well.
thought out very well because, like I said, if we're leaving it up to the states, well, how does the state of Tennessee, for example, how does it regulate gambling when, if I'm doing this online, where are these people? Are they all in Tennessee, or can I require them all to be in Tennessee?
What if I live in Tennessee and I'm on vacation in Florida and I want to, you know, place a bet on the Titans or something like that?
That's another good question. You have to prove you're a resident even though you're remote.
Yeah.
And you're breaking Florida law by doing that.
Yeah. It's going to be, that's the thing, you're right. It's going to go to the Supreme Court at some point. There needs to be a blanket statement.
I mean, this law is sort of the Wild West anyway, because it didn't really define how the states are going to regulate it.
Right.
And again, I think it was just a matter of all these different free apps that you could download, and you've done it, and
I mean, it was fun, man. I liked it.
And it's easy, lose $2, win $20, whatever.
Yeah.
Boom, 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 boom. That's so tough for
it's addictive.
And I think they're just like, listen, we don't want it. Take it out of our hands.
But once you start introducing products, and especially new products like cryptocurrency, for example, it opens up so many doors.
Oh, man.
Look at what happened with the options industry. Getting back to that for a second, it originally was purely speculative, and only speculators did it, and very few people understood it. And most people, even if they understood it, were very dubious about it because it was so speculative and didn't see any value in it. And now it's become very mainstream, and it's become this huge risk hedge industry. And I could see a next step for that being an option that is really a convertible bond. And the way this would work, let's say I would like to buy 100 shares of Amazon right now, but I don't have $160,000. Maybe I got $20,000. So maybe I can buy some sort of an option or a convertible security that will allow me within so many years to buy 100 shares of Amazon at $160 a share or $1,600 a share.
You're watching at that price
right now. Now, as time goes on, if that price goes up, my convertible security is going to gain value.
Right.
If it goes down, my convertible is going to lose value.
Right.
But at some point in the future, I'll be able to actually exercise that and convert that debt security into an equity security and buy those 100 shares. I still got to pay that money, but I've bought an option that doesn't really have an expiration on it.
Right.
And so it's not really an option. It's more, I mean, like, how do you even price something like that?
Yeah.
It would have to be the present value of the future value of stock plus dividend. I mean, it'd be very complex.
When you were discussing the options becoming from a moving into this more sophisticated instrument, when did that start happening? And was that happening because of institutions, or because, like, why did it move into this more sophisticated than?
I think a couple of events precipitated it, and it wasn't institutions necessarily, but I think that the dot-com bubble and the tech bubble and the 2008 crash made people realize that if I'm just a stock investor, I'm at huge risk because every 6 or 8 or 10 years is this big crash and lose half my IRA value and all that. And so at that point, they started thinking about, how can I protect my capital better? And somebody came up with the idea that, well, you can buy an insurance put. Okay, that's one way you can do it. But then you can also do other forms of risk hedge involving options, so that I could, at a certain price, I could protect my portfolio so that if I lose money in my equity side, I can make an offsetting value in the option side. And so there you have a risk hedge. And so I'm not vulnerable to those occasional market crashes that do take things down 10, 20, 50%.
Now,
and I think that all started with 87 was the first one.
Okay.
The big crash. And then when was it? The dot-com bubble around 2000.
Yeah.
And then the tech bubble was like 2002.
Mm-hmm.
Well, that was all kind of like dot-com tech.
It was all kind of together. But I think
together.
I think were they the same thing?
They're the same thing.
Okay,
yeah.
dot-com tech. Okay. And then 08, of course, with the crash of the whole stock market.
Yep.
The Dow 30. McDonald's was the only one that went up, and their product is crap. But, that tells you a lot.
And are we due one for the? And before we move into your next book that you're going to be working on regarding economics, I do want to get to that for sure.
Nerd. When's the next one? Is that what you're saying?
No, I was just
When's the next crash?
When's the next crash? But it's almost like it's an alternative, right? So like we're discussing these crashes are happening. People were looking for alternatives to protect their wealth preservation. So to speak.
What's the next alternative?
What's the next bubble or crash? But then what is that alternative?
The bubble and a crash could both be in crypto. That's kind of what you're getting at, I think. I mean, you could have a crash in crypto. We already had some mini crashes, but you also could have some nice run-ups in the value too. And I love this idea of combining currencies with the options market and with risk hedges, all in one package. And imagine portfolio managers being able to do stuff like this, where right now, portfolio management usually is so conservative, they're investing in 2% 30-year bonds and blue chip stock shares that pay no dividend or 1% dividend. I mean, ultra conservative to the point where they're losing money on an after-tax, after-inflation basis. And that's considered conservative. There's nothing conservative about losing money.
No, that's not conservative. I don't get it.
Yeah, it does. Yeah, conservative is like you should be semi-aggressive. Should be as conservative.
You know, there's a formula that I write about all the time in most of the books I do that very few people have heard of, and it amazes me. If you take the rate of inflation, like right now I think it's 3% or 2%,
2.6.
divide that by your net after-tax income. In other words, 100 minus your effective tax rate. Let's say it's 40%. So 3% divided by 60, whatever that is, you have to, that would be 5%, by the way. You have to make 5% to break even after inflation and taxes. And if your portfolio is doing 2, 3, 4%, you're losing money.
You're losing money, yeah. I mean, the inflation adjusted retirement.
People need to let that sink in.
They do. I mean, it's a huge thing.
It's a huge thing.
Yeah, with inflation, if you are not making more than 5% a year, you're
screwed. And that's inflation and taxes together is a double whammy. Is getting you. And I mean, if you don't take those two things into consideration, I mean, I've seen people who have said, well, I'm averaging 4% per year in my portfolio, so I'm doing pretty good, and I'm in a high tax bracket, so I appreciate the fact that my portfolio is making 4% because I'm a physician, and I'm saying, well, wait a minute, if you're making really good money, your taxable income is probably 40 to 50% when you consider you're in a high tax state too. So your after-tax income is 60% of your income, and then your inflation is 3%, so your 4% kind of sucks.
Yeah.
Michael, how many people at the average level, retail investor, Joe Blow with his Charles Schwab account, know this?
Very few. And part of it is because they don't want to face the reality of it. The reality is, you know what? The only way you can beat inflation and taxes is by doing, and if you don't want to add risk, is by doing something ultra-conservative like covered calls, which is the most basic kind of option. Covered calls in stocks that pay 4% dividend. You're already 4%, and then the covered call is going to be another 8, 10, 12%. You could do pretty well with that. But if you don't want to do options, how are you going to make that kind of money? How are you going to beat your break-even after-tax, after-inflation rate? You can't unless you want to take higher risks.
Right.
And then you probably lose.
Yeah. Quick question: When were puts? When did they become a thing?
78, I think it was.
Okay,
73 was 16. Stocks was 16. There were 16 stocks allowing you to buy or sell calls. And then in 78 they added puts. And over the years, more and more stocks were in, but it was a minority of stocks.
Sure. It still is, but you could you sell puts at the same time as well, or you could buy and sell puts. Okay.
But there again, selling options was considered so high risk that only the wildest, craziest people were doing it.
Wild and crazy
because it was so risky. And of course now, with the enlightenment, as I call it, which is the internet, people are learning that naked puts are no more risky than covered calls. They have identical market risk. And so they're pretty safe, even though they're uncovered. That's kind of the scary word, naked.
Yeah, naked.
Yeah.
Naked trader.
No one likes to be naked.
I wish I knew all these terms. I'm not I don't trade.
I know. No,
I don't trade.
You will, though.
You're getting there, man. You've been saying that for the past year.
You're getting there. You're slowly getting there.
I like studying.
You sent me some fib charts. Don't play.
Trying to figure it out. I'm like, what do you think of this? Am I on the right path?
And you could be a mathematician or a trader, but trying to do both is tough.
It's tough. It is tough.
Yeah. So I ran into that problem because
if you're too analytical, you never get around to the trade.
Yeah.
I know. That's what I'm saying. That's my problem because I've taken statistics, I've taken high-end probability classes, and it's just like I'm looking at this shit. I'm like, this is all just a guess.
But let me tell you the problem with options traders, especially. Majority of options traders are impressed with their own mathematical intelligence, and they'll say things like, well, I've calculated the probability on this out of the money reverse iron butterfly, and I've got a 68% chance of making money. And I say, did you make money on the last one? Well, no, but they're so impressed with their own ability to analyze, they never get around to it. And then I kill them by saying, by the way you're calculating probability is probably wrong anyway.
Yeah.
So
that could be true.
Yeah.
Yeah, so that's where I'm at.
Yeah.
So as I don't know, probably I don't know if any of our viewers are in a position where they want to get in and start playing in this realm, but for me, just discussing, the mathematical aspect and the, what would you call it, the trends or just being able to read charts. Technical analysis, right? So that they can cloudy the waters. Where should I be starting if I want to start, making some trades, equities, options, or what's the best and way for me just to get a grasp of it and understand it?
Well, first of all, you need to find some source for the basic terminology, trading rules,
right,
understanding of risks, range of strategies.
Okay.
That's a starting point. Then you can decide what your risk tolerance is and go from there like any other product. Is this risk appropriate for me or not?
Is that what you call the R?
Mm-hmm.
Okay.
And I wrote a book called Mathematics of Options, which came out earlier this year. And for you, as a mathematical guy, that would be a good place to start. It has all the formulas for all of the return calculations and how to calculate break-even and all that stuff. And now my next book coming out is called The Complete Options Trader, which gets into all of the strategies and payoff diagrams and all of the details you need about not only the terminology, it's got this huge glossary, for example, but also all of the ways you calculate returns, all of the ways that each particular trade works. And it has a link to my website where it has tables showing profit and loss at various prices of the stock for all the major trades. So that would be a valuable book if you want to get into it too.
Yeah,
awesome.
It's solid. I'll definitely say check that out. So Michael, a question regarding options as well, just like into the future of those. In the recent past, they created mini options, which was an option instead of controlling 100 shares, it controlled only 10.
Right.
That kind of went the way of the dodo bird.
And it's gone. Yeah.
Why is that? You think? Just
well, I think
it
was from the exchange point of view, it was too little money for too much work. It's just as much work to do an option on 10 shares as it is to do an option on 100 shares.
Yeah.
And their liability is just as high too.
Yeah.
So it wasn't economically feasible. I think that it was an attempt to appeal to people that, for example, if you like Amazon stock, you want to buy an option on Amazon at 100 shares, you can spend a couple of $1,000s.
Yeah.
And a lot of people don't do that because they just can't afford that option. So a mini option on Amazon where maybe you do 10 shares and it's 160 instead of 1,600 would be much more appealing. But I think the problem with the minis was that they made them too available on too many low-priced stocks.
Sure.
And they should have made them available
on
on super high-priced stocks where it would be more feasible to do.
Well, I mean, so what do you think the next change will be? Because I think right now you have SPY that has Wednesday options expiring.
Yeah.
So do you think that we're going to go to every day or like a binary option
style too?
So exactly. So we're going to go more towards like every stock having shorter and shorter options, where we do like days, weeks, hours.
The weeklies have been a huge, together with decimalization, which means that you can have a price at 100 different prices per $100 or per dollar. What was a big change because it added much more flexibility into the pricing of options as opposed to the old eights. Was a terrible system.
I can only imagine. I can only imagine how trading a stock in fractions would work on options.
Well, people thought 3/4 and 3/8 was about the same. And it's not
quite. No.
But it is one of the things about when you get into fractions, people kind of mathematically lose their way.
Yeah.
But when it's $63.12, and yesterday it was 63.09, well, that's a 3-cent change. That's a lot easier than the fraction process for it. And so I think one change you're going to see is, well, a couple of things. One is options on crypto is unavoidable. It's because you do options on everything else. I mean, you got futures on weather.
I'm telling you, dude, you can't wait for that.
Yeah. And
there's futures on weather.
Yeah.
No, there's not.
Yes, there are.
What?
It's part of the agricultural thing.
I did not know that. Oh, my goodness.
I just get a farmer's almanac and just, boom, okay,
now you know which futures to buy.
You can't, dude, you think
farmer's almanac is pretty spot on.
There's a trader's almanac.
Is there?
Absolutely, yeah.
But I think another trend is going to be, like you were saying, that shorter and shorter periods of time, because if you think back, only a few years ago, all you had was quarterly options. And then leaps became popular. Now, leaps were first introduced, I think, in the late 80s.
Yeah, I think it's 89.
But nobody, I think it's 89. But really, people weren't that aware of it because it was kind of esoteric. But as of just a few, maybe by the turn of the century, I think they became kind of mainstream. So there was the longer term, but now the shorter term, the monthlies was the first one where we'd have a quarterly expiration, but each month you'd also have a 1 month expiration.
Yeah.
Next thing is weeklies. Well, I mean, I don't know how we ever traded without weekly options. I just don't know.
Yeah.
And I think the next step is probably going to be dailies because, and I love that idea because, for example, if you're looking at, okay, today's Tuesday, if I buy an option for Wednesday, if I think it's rich right now, I know that by this time tomorrow, all the time value is going to be gone out of that. So I'm going to do a short put on that, and I'm going to buffer it by 12 points. And tomorrow morning when the market opens and all the time value is gone, I'll buy to close and take my money.
So I think that's a strategy that a lot of people are leaving out right now is that SPY on a Wednesday, you know, because you look at Friday and you go, okay, we have 3 days till expiration. Let me...
3 trading days, 5 calendar days.
Correct.
And that's why the Friday to Monday, you're going to lose a third of the time value right there, maybe more.
Yeah, absolutely. So I mean, those Wednesdays, and that'll be fun, I think, when that comes to... Yeah. But that's an interesting viewpoint that I like that because, the shorter time frame just makes sense.
See, right now with weeklies, the best time to sell an option on a weekly is late on Friday, right before expiration, because you have 7 days till expiration, but only 5 trading days. And this next week's only going to be 4 trading days.
Yep, a good holiday.
Even better. Yeah. And so with those, that change between Friday and Monday usually is 1/3 of time value's gone between Friday and Monday. And then the next most likely time is the day before last trading day, Thursday. You're going to lose between Thursday and Friday morning another 1/3. And then, of course, by Friday morning to the end of Friday, all the time value is going to be gone.
Sure.
But that trading on that Thursday is a little more scary because that's when a lot of exercise happens.
Yeah.
But that week before, from Friday to Monday, is one of the best times to go short.
Man, I gotta read your book because I'm sitting here and I'm like picking up some of the things you're saying again, but I've never traded before.
You would love Leaps, man. Leaps are amazing. Leaps are amazing. So you could buy a long-term option on Apple. So let's say Apple right now. If you had to buy Apple for 100 shares, it would cost you 18 grand approximately to buy Apple right now. Right. But you can take a Leap, which expires in 2020. So a year and a half.
2 years.
Pretty much 2 years. A year and a half. You can buy that right now. Same. Let's say you buy it at 190. So Apple's, let's say, about pretty much 190.
Gosh, about 800.
And you can buy it for about 2,300.
Oh,
2,300.
Oh wait, how close? Where are you in the money? I mean,
I'm one out of the money.
Oh, you're one out.
Yeah.
Okay.
So it'd be about, let's just say about $2,300, $2,200. So for $2,200 investment, you can control 100 shares of Apple, right? So let's say Apple goes from 190 to 200. That's 10 points. That option is going to increase about $4 to $5 approximately. So you would make about 20 to 25% return on an option contract, which is much more than you would make on the actual stock.
That's right.
I mean, the stock
leverage.
Well, I'm understanding.
Sexy.
I just don't know how. I need to learn how the instruments work. It's like I know what the hell a guitar is. I just gotta learn how to play it. That's what I'm seeing here, and it sounds great.
It's guitar playing without the fret.
But you have a new book coming out.
Yes, it's called The Complete Options Trader. In fact, I thought it was going to be here today, but it hasn't been. But it's a great book cover. Paul Gray McMillan is the publisher. They did a great cover. It's a picture of a torso, a man with a tie, and he's got his shirt pulled off like this. And on his T-shirt it says The Complete Options Trader. Yeah. And then my name. So he's standing there like this. Nice. It's a pretty cool cover. And it goes through all of these strategies. It gives you the payoff diagrams. It tells you how to calculate break-even profit and loss, what the risk levels are, how to calculate return, how to annualize, break even, how to bring dividend into all that calculation, and everything.
Nice.
You can crank out some books.
I cranked out a few books.
Yeah, and you're working on one now.
Write. Yeah, he's working
on economics.
Yeah.
Well, actually, I'm working on one on economics. I'm also working on a book on installment trades. This is what Jeremy was just talking about, where you buy long-term leaps. That's half the trade. The other half of the trade is, how can I get that basis down to zero? If I buy an Apple Leaps that expires in 2 years and sell a series of 1 week options over and over and over again, I'll eventually pay for that long-term option so that by the time expiration comes around, my basis in that option is zero. So any value that's left in it is going to be all profit.
Yeah, it's gorgeous. It's gorgeous. Man.
The installment strategies.
Woo!
You're a legend, brother. Thank you so much for being
Thank
here.
you for being
guys.
here.
I appreciate
Thank you.
it.
Great
The
having you
second
back.
edition.
A lot of fun as always.
Second edition. We'll be back for a third edition, I'm
Sounds
sure.
good. Sounds
We'll make sure there's links in the description
Yep.
to your
For all the
website
books.
and your
Thank you.
books.
Yep.
Thank you.
And at the same time, next time we have you back, we had a great discussion on like the energy emittance and driving down the roads with like solar energy and never having to stop for gas because
Right,
it's just
right.
like beamed to you. This guy's got
With
some
a-
great
with a
ideas,
Tesla
man.
tower.
That's what I'm telling you. We got to talk
Tesla
about
towers,
this
baby.
stuff.
Hell yeah.
We got to talk about this stuff. We got a lot of stuff
Pick
to
up the
talk
energy
about.
through the ground like Tesla said you could.
Yep.
Yeah.
Make it
It's
free for
all
everybody.
over there, baby.
Yeah.
I'm pumped. I'm pumped, guys. Keep staying tuned to the IR4 podcast. New episodes every single Thursday with this beautiful person and usually someone else who's absolutely magnificent. Folks from around the world, thanks so much for tuning in. Make sure to love, live, learn. We'll see you later. Bye.